Good morning, everyone. Welcome to our daily market outlook, live daily market outlook. Today's Wednesday, 10th of September, 10th of October 2012. As we can see, the quite negative tone continues to dominate in the markets, as most likely further deepening crisis would give some more impact especially to the single currency. As yesterday, International Monetary Fund urged the European policymakers to deepen the financial and fiscal ties within the euro area with some urgency to restore sagging confidence in the global financial system. In its semi-annual check on the world's financial health, the fund said the euro area's debt crisis was the main threat, and the risk to global financial stability had risen to the last 6 months, leaving the confidence very fragile. The Eurozone plodding progress means European banks are likely to offload approximately $2.8 trillion in assets over 2 years to cut their risk exposure, an increase of $200 billion from a prediction 6 months ago. This is according to the IMF estimation that could shrink credit supply in the periphery by 9% by the end of 2013 and crimp the economic growth. As negative sentiment and the risk of tone continues to dominate, the euro hit its lowest levels, close to lowest levels of the month, approaching the important support at 128.20 that marks 200 days moving average, and the 128.00 1st of October low, extending its near-term downtrend of the recent peak at 131.70, and following the last Friday's upside rejection at 130.70, and now giving a more clear picture of the downtrend. Of course, break below 128 is required to confirm. Sterling is also in the under the increased pressure as the pair breaks 160 as psychological support, 159.75 seen so far, and the downtrend basically below, downtrend from 163.08 previous peak posted on 21st of September now accelerates, and most likely will be signal for a stronger recovery of the larger up rally from 152.67. This is 1st of June yearly low to 163.08 fresh yearly high, allowing for some stronger corrective action according to the current technicals, with dollar yen being again in the sideways mode, but still a more bearish tone seen in the near term as the upside barriers initials at 78.40.60 and more important 78.80.79 still stay intact, while downside is so far protected at breakpoint at 78.00, while break below this level would be quite bearish for the pair. On the upside, as we said, above 79, we might be talking about some a stronger recovery. So far, they're quite neutral and sideways movements seen with the range top at 78, approximately 78.40, while dollar Swiss, after cracking its initial strong barrier at 94.36 zone, is correcting now. This is so far seen as a technical pullback on overbought hourly studies. The top performer is crude oil that extended its recent recovery of a higher low of 88.19 posted 2 days ago, with the 92.88 seen so far and still heading higher, most due to the increased tensions in the Middle East that might be a trigger for further supply problems and reduction in supply, offsetting, of course, the main problem that drove the crude oil price in the recent period, the crisis in Europe and, of course, the worldwide that is threatening for a lower demand in the coming period. So far, the crude oil remains well supported, holding above 92. Gold on the larger picture is still quite positive and supported. However, the near-term outlook looks more bearish as price continues to dip from its fresh yearly high at 1795, testing initial support at 1770 and 1763, with more negative tone seen in the near term. More of this, of course, we will see in our technical part that will come shortly. Just a brief look at today's calendar to see what events we are expecting and what will be more or less important for the markets. As said, the German WPI for September came out at wholesale price index came at 1.3, much above the expectation at 0.5%, and 1.1% of the August release, with the Japanese preliminary machine tool orders for September dipping further from minus 2.7% in August. -3 is today's release. The releases from Eurozone, France and Italy, unfortunately they are not in our calendar, but I will give you the releases. Industrial output for the France is 1.5% on the monthly basis, compared to quite negative -0.2% forecast, and the 0.2% release of July. Quite optimistic thing coming now within the crisis. Italian industrial production. I cannot find this. Just a second. I'm looking for in the other calendar. Okay, industrial output in Italy, monthly release is -0.4% according to the forecast, so no changes in Italy. Still to come in the afternoon, wholesale inventories. This is all from Europe for today, quite a thin calendar. Wholesale inventories from US for August due at 1400 GMT, slightly lower than the previous release of 0.7 in July. 0.5% is today's forecast, and the beige book at 1800 GMT would be the releases, important releases for today. Just to remind you that the US crude inventories are delayed 1 day due to Monday's Columbus Day holiday. This is standard procedure. If the holiday falls on Monday, that usually happens in America, then release of EIA, the crude oil inventories, comes 1 day after, and it's due at 1500 GMT, with approximately 1 million barrels built forecasted for tomorrow's release. And let's take a look now at our technicals and see the latest movements and the expectations for the coming day and the coming period. As said, the euro remains in the negative, under pressure in negative tone, following upside rejection at 130.70 last Friday, extending losses below important 129 support, and hitting so far 128.34. This is just ahead of 200 days moving average and the previous low of 1st of October at 128.00. The strong support zone at 128.20 now comes under threat, as loss of initial bullish momentum on the daily chart, and all indicators pointing lower. See more focused towards the downside on the larger picture. On the 4-hour chart, negative tone again on all indicators. Some corrective action seen this morning of 128.34, the low that was posted in early hours today on oversold hourly conditions, with the initial barrier at 128.84 now coming under pressure ahead of 129 as psychological resistance, and 129, approximately 129.59 is the yesterday's intraday high. Not much to be expected on this corrective bounce, as said, the negative sentiment still keeps the downside well favored for now. I would say a break above 129, initially 129.20, where is the approximately 38.2% retracement, and the 55 days exponential moving average along with the 129.40, where is the descending tentative trend line of 130.70 through 129.86 would improve the picture and the delay immediate bulls. However, not much to be expected unless we see a regain of previous top at 129.89 as well as 130.00 as psychological barrier, that regain of which is required to improve the current negative tone. Initial break above 10 days moving average and currently attempting is at 20 days one that is still pointing lower on the hourly chart. So not at this point not much to be expected unless we see a minimum regain of 129.40, that is trend line resistance, while on the downside break below 128.20 and 129. Of course, a lot of stops are parked below these levels, and most likely some technical trading would push for this. But a clear break below 128 will bring some more players into the game, and the most likely scenario would be extension down to initial support that is approximately 127.40 zone. This is the previous peak of 18th of June 2012, as well as 38.2% Fibonacci retracement of the larger upleg from 120.42 to 131.70, reinforced by ascending trend line of 120.42 through 121.33 and 122.54. So valid bull trend line at approximately 127.40-50 zone. So we have a quite strong support at this point. Most likely these levels will come in focus in case of a clear break below 128, and not to expect immediate break here, as this is acting as quite strong support. We might see some further hesitation at this level, but according to the current situation and the technical outlook, more focus is seen towards the downside at this point. Of course, with the also negative sentiment among the investors, according to the current situation in the Europe and the worldwide, the more pressure is seen on the near term for the single currency against the US dollar. Of course, also the attempt to confirm the downtrend of 131.70 with the lower top at 130.70 now requires a break below 128.00 in order to confirm and allow for stronger corrective action of 120.42 to 131.70 ascent. And the sterling dipped below 160.00 psychological support, hitting 159.75 so far, close to 61.8% Fibonacci retracement of the upleg from 157.53 to 163.08. Quite extended the studies on the hourly and the 4-hour chart, with the hourlies already emerging out of the oversold territory. However, it's important to notice at this point that some bullish divergence, MACD bullish divergence is developing on the hourly chart, and this might result in some a stronger corrective action. We can point it here. We can see the this trend line, and as well as this one. So we have the divergence here that might be a signal. Of course, to confirm any stronger activity towards the upside, we need to see again of minimum 160.46. This is the yesterday's intraday high and the lower high of the broader descent from 162.16 last Friday's peak. Also, we are going to take a look at the Fibonacci levels to see the barriers. 23.6 is at 160.32, so we're talking about 160.30, 160.50 initial resistance zone. This is reinforced by a 55 days exponential moving average that currently starts to move sideways. This is the initial signal as the price breaks above 10 and 20 days moving averages on the hourly chart. A break above initial 160.46 is required to signal some stronger recovery. And then we have the quite strong barrier at 160.66. This is the previous low of 3rd of October. Also the 38.2% Fibonacci retracement. I would say break above this level and possibly 161.00, that is close to 50% retracement of the entire down move, will bring some more positive tone into the near-term picture and allow for a stronger recovery. As said, quite extended studies also on the hourly chart that already started, on 4-hour chart that started to point higher, might be signal for some stronger corrective action. But again, to repeat, regain of minimum 160.66 is required to ease the immediate bear pressure. On the larger picture, downtrend remains firmly intact as long as we are below 162.16, basically the peak of last Friday. And the only break here would be signal for some more significant improvement. On the flip side, a break below 159.75 is to open the next quite important support at 159.10, 159.00, previous high of 23rd of August 2012, daily 55 days moving average, and of course 159.00 is a round figure support, and this will be seen as the next target on a break below 159.75, the recent low of sterling. Not much action on dollar yen so far, following a dip down to 78.07, still keeping the important breakpoint at 78 intact, as more sideways movements, but still the near-term tone is still skewed towards the downside as long as initial barrier at 78.40 stays intact. This also marks approximately 38.2% retracement of the latest down leg from 78.86 to 78.07, and if we see break above this level, then this will be the initial signal of a basing attempt at levels close to 78.00, with of course a regain of next Fibonacci important level 78.56, 61.8% retracement, and of course the lower top at 78.86 required to improve the near-term structure. Holding above 78 base still keeps upside in focus, but as long as these levels previously mentioned, 78.40 and 78.60, stay intact, more focus will be seen towards the downside, as the larger picture is still quite negative and still keeps the downside vulnerable, as the indicators are still below their midlines, although started now to point higher. Confirmation will be required on break above 78.40, 78.60. Of course, the larger picture improvement requires break above 78.86 and 79.0021 that will prevent pair from a further descent and test of 77 support zone, most likely to open way towards 80.00 as the next upside psychological barrier. Of course, on break of important 79.21 and 79.33, that marks 200 days moving average. And the dollar Swiss is in the near-term corrective mode of 94.30. This is the overnight's high and day's high so far, cracking the initial strong barrier at 94.00, 94.36, break above 200 days moving average. Yesterday's close basically above this level. Moving average is currently at 90, 93, 97. Yesterday's close occurred at 94.00. This is quite a good signal and supportive, but still we need to see the clear break above 94.36 as it approached basically the resistance zone. 94.0036 has been dented, but clear break above 94.36 and probably today's close above this level is required to confirm the near-term bullish stance, as the pair broke also above the trend line resistance, also at approximately there 93, currently at approximately below 94.00 currently. This is the bear trend line of 99.70 through 97.96. Break and close above this level, of course, is going to be another supportive element for the pair for possible further corrective action of 99.70 to 92.37 descent, with the 94.61 low of 29th of June 2012 seen next, ahead of 95.00 round figure resistance, and the 31st of August low and just above this we have 38.2% Fibonacci retracement at 95.17. Break above these levels is required, as I said, to signal some stronger action. Otherwise, we might see the further congestion under the 94.36 with downside so far being protected at 90. Do apologize. At 93.34. This is the previous support, where is also the bullish crossover of 20 over 55 days exponential moving average. Basically, break below these levels would be quite risky. 93.50 and 93.30 in any reversal below these levels would be quite risky for the pair. Ideally, reversal approximately at 93.70. This also marks approximately 38.2%, exactly 38.2% retracement, reinforced by 55 days exponential moving average. Is seen ideal point for corrective reversal of overnight's high at 94.32. Keep the near-term bulls in play for a possible further extension higher. As said, the more positive tone now seen on the lower time frames studies sees potential for a clear break above 94.36 required to confirm the near-term base at 92.37 and allow for a stronger corrective action. 94.61 and 95.00 seen on a break upside. On the downside, of course, as said, the 94 loss of 94.30.20 would be quite risky, as it will attract psychological 93.00 and then key near-term support at 92.73 and then 92.37 base. And a quick look at gold. As said, it remains well supported on the weekly picture is still fine. Let's take a look. Ichimoku studies show the increased downside pressure as the pair breaks below the cloud. Cloud is at 1763. This is equivalent to our previous lows, and the good support with the 1760 currently trading around this zone. This is the low of today. The Ichimoku studies remain quite bearish at this point, yet Tenkan-sen line needs to go below the cloud along with the Kijun-sen in order to have the full confirmation, while daily Ichimoku studies are giving just initial bearish signal as the price broke below the Tenkan-sen line. This is a weak signal and still keeps the larger uptrend well in play. And the similar situation is with the daily studies that are still in the positive territory despite current descending, seen just on the as corrective action from the overbought territory seen on the recent peaks at 1791 and 1795, with the golden cross of 55 over 200 days moving average, and the 90 days one now approaching the 200 days one, seeing well supportive for now. Different, of course, picture is on the hourly chart where the studies are still negative and quite extended, currently consolidating at approximately 1760, but no any more significant action seen, signaled or developing so far, keeping the near-term outlook in the negative territory and looking for a possible further extension lower. On the 4-hour chart, we are still within the range, but the tone is skewed towards the downside as we lost important supports at 1770 and 1763. Next one is also the very important one, approximately 1750 zone. These are the previous lows and the previous narrower basically range floor, loss of which will be looking for a test of Fibonacci expansion at 1743, and of course the spike low and the range bottom at 1736. That will be quite risky for the gold. A break below this level will likely allow for some stronger corrective action of the latest up leg from 1590 to 1795 70, with the 1717. This is the low of 13th of September, as well as 38.2% retracement, seen as a trigger towards 1700 psychological support, and then 50% retracement at 1693, reinforced by 55 days moving average. As said, so far we're still in the range, but more focus seen towards the downside, and basically main risk is seen on the attack of 1750 zone that would trigger some further weakness, and of course then risks towards 1736, our near-term break point. And finally, crude oil, we already mentioned that it's it's the top performer of yesterday. Starting with the daily Chimoku studies for the November crude oil. Basically, no action seen at this point, and no signals seen at this point, as the price is still within the cloud and still having no clear direction. But if we move to the 4-hour one, then we can see more positive outlook. Actually, the fully bullish, as price is well above the cloud, and the both moving average, basically the first Tenkan-sen moving average is already above, and the other one is penetrating the cloud, giving a quite positive tone. A similar situation on the, again, 4-hour chart, following bounce of 87.69, 3rd of October base that is now attempting towards our initial barrier at 93.00 as a psychological, and 93.30. Recall I mentioned this yesterday, this break above initial one, and the more important 93.80 and 94.00. This is the previous range floor is required to confirm the base and allow for some stronger recovery. Any failure under these levels would be just seen as the consolidation. We need to see the clear break here to confirm, as said, the base at 87.69, and allow for a stronger corrective action of 100.72 to 87.69 down move. 94.20 is the 50% retracement. 95.74 is the 61.8% retracement, and the break above these levels is to refocus upper boundaries. On the daily chart, the outlook is still quite negative, although the indicators started to point higher, but still a lack of momentum is seen at this point, as we need to see the break 93.31, 93.80 in order to, where is basically the 55 days moving average. Break above these levels, as said, is required to improve the structure and the signal a higher low of the corrective action. That will be signal for the end of the corrective action, the bottoming of the correction from 172 to 87.69, and open way for the upper barriers. Otherwise, further congestion and possible further extension lower, as daily studies are still in the negative territory, would be quite likely scenario. Now, the most important for crude oil is the current situation in the Middle East that is threatening to escalate, as NATO said that they have plans and are ready to protect Turkey from attacks from Syria. This is quite a serious problem now, and this could escalate in the much bigger conflict than it's currently, and most likely, as I mentioned at the beginning, would offset the current fears of the Eurozone and worldwide crisis. So we have two things that we have to watch. The one that will be more strong and dominating the situation will basically define the near-term direction of the crude oil. So far, the more focusing towards the upside, as escalating conflict in the Middle East is seen as a stronger support for the crude oil compared to the negative influence from the world crisis. That was all from me for today. I think we had it for a good half an hour or even more. Do you have any questions to submit, please? No questions? Okay, if we don't have questions, there is one. Okay, thank you very much for the comments. Thank you for being with us. Thank you for all these comments. We are expecting you again tomorrow at the same time at 7 o'clock GMT, 8 o'clock Central European Time, 10 o'clock local Cyprus, 9 o'clock Central European Time, 10 o'clock local Cyprus time, where we'll come with the new updates. Until then, I wish you a very nice day, and of course, the most important, very successful and profitable trading. Good luck.